so in love with you.
Welcome back to Real Estate Mindset. Today's video, y'all, is the CoreLogic report on the probability of a housing market crash. Now, what we're going to do today is we're going to analyze some data, but we're going to do it in video form from Selma Hepp. And what they're really going to cover is how much equity growth has been happening through various metro areas and various states, and also the probability of a housing market crash, or better said, a negative equity growth in certain metro areas. Now, I'm really excited about this because finally, big institutions are starting to say that there is a probability of negative equity loss, and that probability could happen this year in 2022. Now, I've been saying that for a very long time. I have been trying to sound the alarm for y'all to educate yourself and empower yourself so that you can be a winner, okay? So we're gonna take a look at the video. And then after that, I'm going to go over what I believe is the number one and number two biggest factors at bringing forth a housing crash in 2022. And then I'm going to talk about the number one and number two things that I think that potential home buyers are biggest at risk of. Okay, so we're going to go over all of that great stuff, you guys. And if you can, just for the YouTube algorithm, if you can, like this video, comment on this video, share this video, okay? And as always, I definitely appreciate your comments. I absolutely love your guys' comments. Keep commenting periodically through this video so that I can get your insights as well, and we can grow together as a community. And that is really what Real Estate Mindset is all about. Now, remember, have the right mindset going into 2022. And if you do that, I believe you're going to get ahead. So let's start this video right now.
Welcome to the CoreLogic Economic Insights. My name is Selma Hepp, and today I'll discuss the potential risks of price declines in the real estate market. With home prices continuing to reach new highs and the market showing few signs of slowing in most of the country's metropolitan areas, questions surrounding rising housing market risks are top of mind for many. In 2021, home price growth surged to a 15% annual increase from 2020. This is triple the average rate seen in the decade prior. Although home price gains are expected to slow in 2022 and average a little less than 10% year growth for the year, the recent rapid acceleration in prices has led to overvaluations in some markets, therefore pushing the risk of price decline in the year ahead. First, however, let's take a look at the relationship between home price growth and the share of metropolitan areas with price declines. Even while home prices are increasing nationally, there are still places where home prices could be falling. Prior to 2006, a period when home prices grew steadily, an average of 4% of US metro areas saw price declines. More recently, when the pandemic started in 2020, some 15% of US urban areas saw price declines. That share dropped to near zero during 2021.
Thank you, CoreLogic, for being honest. I'm loving that CoreLogic is kind of finally being honest. CoreLogic is really good at providing data so that we can make an informed decision. I believe they're still a little bit conservative, and you guys will see that as we go along here. But what I really want to point out on that video is they are saying that the possibility of negative equity growth in certain urban areas has already begun. Think about that. All of these people saying, oh, the market's not going to crash. It's still a great time to buy. It's so great time to buy. There may be already cities, specifically urban areas, though they're not really going into metro, high demand areas, that may already be experiencing that market crash that I'm talking about. And remember what I'm saying by market crash. I'm saying any negative equity is a market crash, right? Any lack of appreciation or growth in your home, that's a crash, right? And usually that spreads. I really, really appreciate them for kind of, bringing this to public light. And this was done an article was done from CoreLogic, and this video was done a couple days ago, I believe on March 16th. So I'm a little bit late on reporting on it, but it's just more and more proof, y'all, that what I'm saying, what I'm warning you guys about is in fact a strong likelihood and a strong possibility. So we need to start empowering ourselves. And if you can, comment right now. Just push pause on this video and comment what you think, and whether you think urban areas are going to be the first places to decline in equity. Comment right now. Now we're going to go to the next part of the video where they're going to go over rapid increase in equity growth, because remember, in 2020 and 2021, double-digit equity growth. In fact, some places are still saying in 2022 we're going to have double-digit equity growth, like Zillow, Unbelievable with Zillow. You know, the thing with Zillow is they're a for-profit company and they do better when the housing market's thriving. So I'm pretty sure they got in a boardroom and, you know, all these smart people were a little bit biased and say, how can we appear that we're giving proper data, and how do we make it appear that the housing market is actually going to have double-digit equity growth again? That's what I believe is going on with Zillow. I have such strong opinions on Zillow, but regardless, let's go into the second part of this video from CoreLogic right now.
Now let's see where rapid home price growth has led to overvaluation of home prices. For that, we look at the CoreLogic Market Conditions Indicator, which provides a benchmark that indicates if a metro area's home prices are overly high compared to local household incomes. If they are, the market is considered overvalued. As the map illustrates, many of the markets in Mountain West and Southeast, where home prices grew by as much as 20 to 30% year over year in 2021, are now overvalued.
So if you guys saw from that map, and I love how they're using the words overvalued, because that's what I've been saying. These houses are absolutely overvalued, especially on the West Coast, especially in certain metro areas, Sunbelt cities, Austin, Texas, like I've been screaming out loud. Now, as you guys know, it's easier for me to talk about Texas because I live in Texas. I'm a loan officer in Texas and have been for a long time, for I believe about 9 years, and that's the entire state of Texas. I'm a loan officer, and I'm also a realtor in Houston. So if you have questions specifically about Houston, reach out to me. My contact information is in the description. But overvaluation is really, really easy for me to see, okay? So I'm really glad that they're emphasizing that. We're gonna go on to the next part of the video right now where she talks about the possibility of a negative equity decline in this year, or what she says is the next 12 months. Now, I believe they're being conservative, but thank God we finally have another outlet of data basically ringing the bell, sounding the alarm, and basically saying, stop buying. And if you are buying, have the right mindset. And then remember, guys, that right mindset is the long-term hold mindset. If you still want to buy, right? But go in with the proper expectations, okay? Plan for the worst. And if you want, hope for the best, but plan for the worst. The lack of planning is how we always get into trouble. This is nothing new, right? It's just one big circle. And that is what I'm telling you guys. We are in a circle right now. So let's go on to the next part of the video right now. And, you know, even CoreLogic is being conservative with how they're talking, but I believe you guys are going to like this data because it is going to basically complement what we're already saying and what we already believe. Let's take a look right now.
Nevertheless, the risk of price declines remain low. According to the December CoreLogic Market Risk Indicator, only 12% of metro areas had over 50% probability of price decline in 12 months. 1/3 of metro areas had less than 10% probability of a price decline. The risk for price decline, however, remains higher in Northeast, in West, and the Southwest, and are generally driven by higher unemployment rate, lower income growth, and/or a lower rate of population growth. On the other hand, the areas that are considered overvalued but remain with low risk of price declines are supported by low unemployment rate, stronger income growth, largely brought on by immigration of population with higher incomes, and solid housing starts. For more information on CoreLogic's perspective on the property market, please subscribe to our channel, like this video, and visit our blog. See the link below. Thank you for watching.
Okay, subscribe to her channel. She's an awesome lady that's spitting just facts. Now, here's what I really want you guys to focus on. Even CoreLogic is now saying 70% chance of a market decline or a market crash within the next 12 months. And essentially this year, a 70% chance. Now, if people have a bet and they go to Vegas and there's a 70% chance to win, how many people are going to take that bet? A lot of people are going to bet on that. So this is just going to get worse from here on out, you guys, because now we have other factors that are coming into play, the war, the inflation, all of that type of stuff, okay? So definitely pay attention to these facts by CoreLogic, pay attention to what I'm saying. And again, remember, I'm not a financial advisor. I'm just a normal person analyzing data and sharing with you guys my opinion, okay? Never my advice. I accidentally say my advice sometimes because I want to advise, but I am not an advisor. I am an opinion sharer. Now let's go into a little bit about my opinion. Now let's take out of the equation the massive record number of new build permits that were pulled, okay? Now, it's interesting to note that Texas is the #1 state with new build homes. Dallas is number 1, and Houston, where I live, is number 2. But let's take that out of the equation of a housing market crash. So we're going to take out new home building permits, which will increase inventory. Let's also take out less investor demand as well, which is also an increase in inventory. Let's also take out the surge of foreclosures, which is month over month up 700%. Let's take that out of the equation, which will in reality increase the inventory. Let's also take out of the equation that the government and the Federal Reserve have stopped giving us free money in the form of PPP loans and stimulus, which will lead to more inventory. Let's take all 4 of those things out of the equation and talk about what I believe is number 1 and number 2 factor at bringing forth a housing market crash. So the number 1 thing that I believe is the biggest factor at a housing market crash is affordability is basically unraveling at the seams. It does matter that we have a huge supply shortage. Okay, right now it's still a toxic seller's market. We do not have enough homes that we need on the market for the housing market to balance out. That is a fact. But if people cannot afford to even live, let alone buy a house, affordability is going to kill the housing market. Talk about stagflation as well. That's the number 1 thing that is going to attack a housing market. Now, personally, I believe it needs to be a buyer's market. Okay. Now, here's the number 2 thing. The number 2 thing that I believe is a danger to a housing market crash is tightening lending restrictions. Now, you've seen some of the videos that I've done about inverted yield curves. Inverted yield curves is essentially going to make it to where banks no longer make the same amount of profit on the interest rates. That's why when you see the Federal Reserve lift rates only 25 basis points, that could mean 100 basis points to mortgages, right? Tightening lending restrictions, in my eyes, is coming to 2022. Mark my words on that, because of the less profit the lenders are going to make, the more they're only going to want to lend to people with outstanding credit worthiness. Okay. So those are the top 2 things. Now, let me tell you about the top things that I believe are a danger to potential homeowners. Now, the number 1 thing that I believe is a danger to potential homeowners is themselves. I believe the biggest danger to Americans is themselves and the lack of planning and the lack of preparation going into 2022 and 2023. I'm worried that too many people got comfortable to living, with an abundance of money from the government, with cheap interest rates, with forbearance agreements and things like that. If people fail to prepare, if people fail to plan and empower themselves through education, through many opinions, not just mine, many opinions, then they will lose, because we are headed into a time of pain. Now, here's the number 2 thing that I believe is going to be a risk to potential homeowners, and that is institutional investors. Now, as we saw, Zillow, Redfin, and BlackRock took a massive $1 billion hit. Those institutional investors, I can guarantee you, they're sitting on the sidelines waiting to pounce on the shift of the market. So that's the number 2 risk, you guys. Now, what does all this mean? It just means you guys got to get uncomfortable and make some change. And through that change, like I've said, is super empowering. So as always, my opinion, not my advice, remember, my opinion is save as much money as possible, right? Stop going out to eat. Stop using your credit cards. Get out of consumer debt and work on your credit worthiness, so that we are at the top of the top of the top of the tier, so that when we go to invest in real estate, we can get those loans that are actually decent loans as opposed to other consumer debt. Okay. Now, I hope this was inspirational to you guys that are preparing for a recession, that are preparing for a buyer's market, because it should be an inspiration, because it should allow you to make changes right now. It is not too late to make changes, so that when this happens, you guys are ahead. Now, as always, I wish you luck out there, and I hope you win.